Okay, so there's this huge shift happening in the American housing market. It's not something you'd see on the news every night, but it's happening in the actual foundations of the new buildings going up in our cities. It's a quiet revolution, really, that's going to define how and where a lot of us live for years to come. So let's get into it.
It all starts with this one number, 95%. Just let that sink in for a second. On its own, it's just a percentage. But when you talk about American housing, it represents a change that is, well, it's profound.
Because what that 95% means is this. Of all the new apartment and condo buildings that started construction recently, almost all of them were built to be rented, not sold. Think about it this way. For every 20 new multifamily homes being built, 19 of them are designed from day one to be leased out, not owned.
Look, this isn't some small blip on the radar. No way. This is a massive, industry-wide bet on a future where more and more Americans are going to rent the place they call home. Let's break down what this 95% bet really looks like.
All right, let's get into the raw numbers from the end of 2025. You've got 96,000 new multifamily units that started construction. Okay, but check this out. A staggering 91,000 of those were built for rent, and the number built to be sold as condos, just 6,000. I mean, the gap between those two is just enormous.
And this isn't a trend that's slowing down, it's actually speeding up. The number of new rental units is up a full 18% from just a year ago. So the big takeaway here is that this heavy tilt towards renting, it's only getting heavier.
So with all this money and all this construction pouring into rentals, you've got to ask, what's on the other side of that coin? Well, it's the near disappearance of the brand new for-sale condo from the American landscape. It's just vanishing. This chart right here just lays it all out, plain and simple. Only 5% of new multifamily construction is being built for buyers. The other 95%, that's for renters. This is genuinely one of the most lopsided markets anyone has on record. Okay, to really get how wild this is, you have to see it in context. For over 20 years, the market was pretty stable, Rentals made up about 80% of new builds. Then we had the crazy condo boom in the mid-2000s, where that share dropped to a historic low of 47%. But today's 95%, that isn't just swinging back. That's swinging into a whole new ballpark.
So the obvious question is, why? Why have developers pretty much just given up on building condos for people to actually buy? Well, it turns out it's not just one thing. It's more like a perfect storm of reasons.
For a builder today, trying to get a for-sale condo project off the ground is, like I said, sailing into a perfect storm. They're facing huge risks from potential lawsuits. They find it way harder to get financing, and then they run smack into the wall of housing affordability that affects us all. And meanwhile, you have investors just lining up, checkbooks out, ready to fund rental projects. For developers, it's kind of a no-brainer.
Let's just break down one of these terms, liability exposure. What does that even mean? Well, simply put, if you build condos, you face a much higher risk of getting sued over construction defects, sometimes years down the line. That potential for these incredibly costly lawsuits makes building apartments to rent a much safer, more predictable business decision.
Now, this shift from ownership to rental, it's not just some abstract number in an economic report, right? It physically changes the homes being built and, really, the cities you live in. It changes the whole feel of our neighborhoods.
Yeah, think about it like this. Back during the condo boom, the whole goal was to build larger units for owners, for people who were planning on sticking around for a while. But today, the game is totally different. The focus now is on creating smaller, more efficient, and more affordable units that can be rented out quickly to a much wider group of people.
And yep, the numbers totally back this up. Today, the average new multifamily unit is just over 1,000 square feet, and that's noticeably smaller than the apartments we saw before 2008. It's a direct reflection of that market-wide pivot towards smaller, rental-focused layouts. And this way of thinking, it goes way beyond the front door of the apartment. It influences decisions about everything. How many parking spaces are needed, what kind of common areas get built, the gyms, the lounges, and the overall cost and complexity of the whole building's design.
So all of this leads to the million-dollar question. Is this rental boom the new normal? I mean, is this it? Or could that pendulum actually swing back?
Now hold on. Before we officially declare the condo dead, it's really important to add a little note of expert caution here. The chief economist for the National Association of Home Builders, a guy named Robert Dietz, he points out that these numbers, as dramatic as they are, could get revised a bit in the future as more data comes in. So it's a huge trend for sure, but the exact number might wiggle a little. So things were going to change course. What would it take?
Well, according to the analysis, you'd need two really big shifts to happen. First, changes to those liability laws to reduce the risk for builders. And second, some really significant improvements in mortgage affordability to actually help buyers get in the door.
And that really brings us to our final thought. The data couldn't be clearer. Developers are overwhelmingly building a future designed for renters. So the question we're all left with is a pretty big one. In a nation where the path to ownership seems to be getting narrower and narrower, what does that mean for the future of the American dream itself?